Sometimes finding great dividend stocks to invest money into can seem like a daunting task. But in today's video, we're going to be going over how I find great companies and the qualities I look for in those companies when I invest. For those of you that are new to the channel, my investing strategy is to invest in great, high-quality companies that I can envision being in our future for a long time that also have a safe and reliable dividend that has plenty of potential to grow in the future. With all that out of the way, I upload every Saturday. Make sure to join the Discord link in bio, smash the like button, subscribe. We're trying to get to 150 by the end of the year, and roll the intro.
Hello, I like money.
To start off, I think it's important to note that not every company that's great has a dividend. Let's look at examples like PayPal and Disney. Disney suspended their dividend because a lot of their income was impacted by the pandemic, and obviously they're going to have a much higher payout ratio if they were to still pay that dividend. But the first and the most important quality that I look for in a long-term stock, dividend stock to be specific, is the economic moat. The economic moat is basically a company that has a competitive advantage or a built-in competitive advantage from its history against its competitors. Here's a clip of Warren Buffett explaining the importance of an economic moat.
I mean, Disney is selling, we'll say, home videos for, I don't know what, $16.95, $18.95, or whatever, all over the world. People, and we'll say particularly mothers in this case, have something in their mind about Disney. I mean, every person in this room, when you say Disney, has something in their mind about it. If I say Universal Pictures, you don't have anything in your mind. If I say 20th Century Fox, you don't have anything special in your mind. If I say Disney, you've got something in your mind. And that's true around the world. Now, picture yourself with a couple of young kids, who you want to put away for a couple hours every day so you get a little peace of mind. And you know if you get them one video, they'll watch it 20 times. So you go to the video store or wherever you buy the video. Are you going to sit there and premiere, 10 different videos and watch them each for an hour and a half to decide which one your kid should watch? No. I mean, let's say there's one there for $16.95 and the Disney's there for $17.95. You know if you take the Disney video, you're going to be okay. So you buy it. And you don't have to make a quality decision on something that you don't want to spend the time to do. And so you can get a little bit more money if you're Disney, and you'll sell a lot more videos. Makes it a wonderful business. Makes it very tough for the other guy. How would you try to create a brand? DreamWorks is trying, but how would you try to create a brand that competes with Disney around the world and to replace the concept that people have in their minds about Disney with something that says Universal Pictures? So that the mother's going to walk in and pick out a Universal Pictures video in preference to a Disney. It's not going to.
I believe that the economic moat is the single biggest tool when looking for a great quality stock. I think that's also one of the biggest factors I look for when investing a stock as well. If you're still a little confused about the economic moat, here's a simple clip of Warren Buffett explaining Coke and Costco and how it relates to the economic moat.
Been a struggle between the retailer and brands. I mean, if I've got a terribly weak brand and I want to get into Walmart, I'm not going to be able to do it. That offer all kinds of crazy concessions, and I want to be in Walmart if I have some sort of consumer packaged goods. The negotiation is way different if you have something essential versus non-essential. 10 years ago, Costco tried to get rid of Coca-Cola. Costco's got terrific loyalty among customers, and their own Kirkland brand is a $39 billion brand now, and it moves from category to category, and they only started in 1992. So they know brands, but in the end, they put Coca-Cola back in. If it had been Royal Crown Cola, they wouldn't have had to put it back.
I'm sorry if I'm a little extensive on how I view the economic moat. I just want to, tell you guys how important it is when you're looking for a long-term great stock. The next thing I look for in a long-term dividend great growth stock is a safe payout ratio. Now, payout ratios can be tricky because a lot of them depend on a sector. For example, REITs, I think, have to pay out like 90% of their income in dividends. So obviously, I'm making an exception for that. But for me, ideally, the lower the payout ratio, the more enticing I am to buy the stock. This is because they have, I think they have more long-term potential, and they have more money to invest in their business right now. I'd rather, pay the price, for some lower capital appreciation, for some high dividends and higher capital appreciation long-term. The next thing I look for in a great company to invest in is that they don't have any outstanding or bad debt. Now, if you look at companies like Microsoft that have debt, I consider that good debt because they're going to make back money in those investments that they made with that debt. But, I'll be honest here, I'm an AT&T fanboy, but they had some bad debt and they are paying it off, which is why I'm still invested in the position. Another thing I look for is, going to places in real life and seeing how customers actually act at the stores and seeing, how populated they actually are. For example, I went to Target yesterday and I just saw how many people go there. That's really a thing that, I look for in a long term great stock because I think a lot of stocks these days are just, people's speculation and not people, actually going out in the world and, seeing it for themselves. Another example, I go to Starbucks sometimes and it's always packed there. McDonald's too, it's always packed there, no matter where you are, and that's something I really do look for in a great stock. And lastly, I look for a lot of things in a great stock, but these are just a couple things I'm going to mention. Is the consumer addicted to the product? We're going to provide some multiple examples here. First off, I'll go back to Starbucks. Obviously, consumers are addicted to caffeine. That creates a reoccurring customer base. That occurs reoccurring cash flow. That occurs to, more investments being made. That occurs to more cash, which equals more dividends and more capital growth potential. The next example is Apple. Look at Apple. People are addicted to their phones all day. People spend so much time on their phones, and that results in more business for Apple. Look at Nike. Look at sneakerheads with Nike. I think they possess great economic moat. People are addicted to buying Nike shoes. They'll pick exclusively Nike shoes. People pick exclusively Apple phones over Samsung. This is one of the greatest qualities that I can give to a long-term stock. This is one of the greatest companies I want in a long-term stock. And overall, I think that sums up the video pretty well for me. So, in conclusion, for my top weighted, great quality companies that I look for, I want people to be addicted to the stock, the company, I should say, or the brand. I want, them to have safe financials and overall I envision them being in our future for the next 20 plus years at least. Now, guys, the type of analysis that I did today was called a qualitative analysis. A quantitative analysis would have been me going over all the financials, which is, important, but in my opinion, I think a qualitative analysis is much more important. So, guys, let me know what you thought of the video. How much do you agree with me here? Do you think qualitative analysis is more important than quantitative? Let me know in the comments section, your thoughts on the video. Make sure to like, subscribe. I'd really appreciate if you guys could subscribe. I want to put out really valuable and entertaining content for you guys to watch. Join the Discord, and of course, do dividend stocks, not drugs. I will see you guys next Saturday.